And our top focus at this hour is on the rupee, which has been on a downward spiral for several months now. Just yesterday, it touched another record low, breaching the psychological barrier of 80 against the dollar. But however, there has been a marginal recovery since then, and that's what we're going to focus on as far as what next for the rupee. Let me, in fact, welcome our guests who are joining here on the broadcast. We've got Madan Sabnavis, who's joining us, Chief Economist of Bank of Baroda, and Professor Amirullah Khan. Thank you, both of you, for joining us. Madan Sabnavis, let me start with you here. There has always been so much talk about psychological barriers, whether we look at the stock markets or even now in the rupee. How much does it actually matter? But the larger question really is that this barrier of 80, now that it's crossed, how much further and, importantly, how fast?
The thing is that psychological barriers are creations of the market. So the market always looks at these kind of numbers, whole numbers like 80, 75, and they react in conjunction with how the currency is moving. So what really happens is that when the psychological barrier actually should make a difference, but because it's the market which is concerned, the moment it touches the mark of 80, there is a feeling that it's going to depreciate even further. And therefore now the market will be looking at numbers like 81 or 82. And the important thing, as you mentioned, is that how soon or how long will it take before we reach these kind of numbers. So that is going to be largely guided by two sets of factors. One is what happens to the dollar. We've seen that the dollar-euro parity has almost been achieved. And will the dollar become more stronger than that? One is not quite sure, because we should remember that as the Federal Reserve keeps increasing interest rates, there would be a tendency for the US economy to slow down. It will be less strong than what it's perceived today. And that itself should be a self-correcting mechanism. The second part is as to what exactly does the RBI do. The RBI has been monitoring and guiding the currency, I think, in an impeccable manner. And it's made sure that we don't depreciate that fast, which creates a sharp fall. At the same time, it's made sure that the rupee continues to depreciate in line with what's happening to other currencies, so that we don't lose our export competitive edge. So to my mind, I think we'll keep hovering around this number for some more time. And because I've noticed that since March, the rupee has been losing it's been going down by 1 rupee almost every month. I think July is the first time we've crossed both 79 as well as 80. So I think it's be around this particular range, but we will be testing 81 probably in the next month or so.
All right. Just taking that point forward, Professor Khan, at the end of the day, Fed is increasing rates till their inflation, of course, is controlled. In India also, we are pretty much doing the same thing, increasing rates. We also have inflationary pressures. But at some point, that stability should really come in both the rupee and the dollar. Where do you think we're going to see that stability come in?
It is a very difficult forecast to make right now. And as Madan very rightly pointed out, that there is going to be an equilibrium soon. Now, some of us predict that it will stop at 80, whereas there are those who actually find the rupee going down to 85. Be that as it may, what is important is that we should stabilize at some value, be it 80 or 85, because that equilibrium will then allow the RBI to monitor the currency and to ensure that it is judicious in spending the foreign exchange reserves on open market operations. And B, the large private sector. You see, the large private sector today is seriously impacted by a falling rupee, because our private sector is heavily import dependent. And therefore, you will find an immediate impact on its productivity and profitability. So what we expect is that this slide will continue for a little bit, because conditions are still very uncertain. Imports are rising like never before. And exports, which, and that's the paradoxical situation. You see, when the rupee is getting weaker, what one would expect is that exports would pick up. But for some obvious and some non-obvious reasons, exports are refusing to pick up. And that is why the trade deficit is widening. So there is a pressure on the rupee from various fronts. It's not just oil, it's not just the Ukraine war. There is domestic pressure, there is foreign pressure, there is a strong dollar. So it's a combination of a number of things. And I think that, or what we see is that once this situation stabilizes, and it's going to be anybody's guess on how soon that is going to happen and at what value. As I said, it could be 81, it could be 85, it could stay at 80. So there is enormous amount of uncertainty. And the last point in this regard that I would like to say is that it's also important to note the enormous amount of foreign institutional investment that has been pulled out. We are talking of something like $30 billion that we have lost over the last 6 or 7 years. And therefore, that also puts pressure on a rupee whose demand is constantly coming down. So therefore, as a direct answer to your question, anything in the range of 80 to 85,
right?
Anything from now to 6 months from now.
Okay, all right. Mr. Sabnawis, one of the other big arguments has been that it's not just the rupee, other currencies, whether it's the yen, the euro, etc., have all fallen more. So effectively, the rupee has strengthened against them. Is this a fair way to analyze the fall of the rupee? What is your perspective?
Absolutely. I think that's a fair way to look at it, because if we just look at it by itself, you'll say, look, the rupee was 74, 75, maybe 6 months back, and today it's come to 80, and you'll say, look, what's happening? But if you actually look at all the other comparable currencies, when I say comparable currencies, you're looking at the emerging markets, you're looking at some of the developed economies, and you just juxtapose all these numbers together as to how has the currencies behaved. Now, we've been looking at, say, a set of around 20 currencies, which include both your things like what you mentioned, euro, pound, yen, as well as the emerging market currencies. We see that the depreciation which we have had since say January 1st, is something in the region of around 7.5%, which is just around the average, midway through. So there are certain currencies which have done better than us. Like if you look at the yuan, it's probably done better than us. We've seen the Hong Kong dollar has done better than us. But if you're looking at the other currencies, which in particular, as you're mentioning, the euro, the pound, and the yen, I think the rupee has actually appreciated. Now, this happens because as the dollar keeps strengthening, we normally reckon the dollar vis-a-vis the euro. And as I mentioned earlier, something which was in the region of $1.18 per euro has now come down to parity levels. So as the dollar keeps strengthening, automatically, I think there are certain collateral benefits which India has gotten. So it's a very fair way of saying that that the Indian rupee has been performing reasonably well in this kind of an environment. And I would say that the credit for this really goes to the RBI, which is making sure that there is no free fall. At the same time, whatever advantage could possibly be gotten on account of export competitiveness is something which we're to achieve. Again, I would say that our exports are more driven by the state world economy rather than the exchange rate, but at the margin, definitely it does matter. And I think we have probably not lost that edge so far.
Right, absolutely. Just on that point about RBI, Professor Khan, coming to you here, like Ms. Sabnawis was pointing out, RBI has been monitoring very closely, but there's also a debate about the extent and the kind of measures that RBI needs to take. Your perspective at this point in time, and given what is going ahead as far as rupee is concerned, what kind of intervention do we need right now?
Yes, it is true that the RBI has intervened and has intervened in a fairly significant manner, to spend $50 billion of reserves on keeping the rupee stable is kind of unprecedented. The only criticism that one would have is that the RBI came in rather late and therefore could arrest the slide, the 7% slide that we saw, which was very steep and did hurt a lot of our commodities, especially because of inflation and price rise. So while it has come in late, I think that the RBI now has to be very careful because at the moment our foreign reserve situation seems to be going towards a fragile situation. And if we indulge more in open market operations, we will see a significant decline in the reserves. And that is going to cause the kind of worry that it caused 30 years ago, a worry that we are not very familiar with now.
Right.
So RBI should be more focused, I think, on internal policy, on the monetary policy, on ensuring that the interest rates are used to control inflation rather than go after a rupee that will shift into an equilibrium phase very quickly.
Fair enough. Mr. Sabnawis, the other important move from the RBI is, of course, paving the way for global settlements in Indian rupees. And this, of course, is going to be more beneficial in the long term rather than immediate. But how would you gauge these benefits in terms of India being able to establish the rupee in global markets? I mean, we know what's happened with China, no meaningful movement towards replacing dollar as the global currency.
I think the RBI has done this keeping in mind the issue with Russia, because we do have certain export relations with Russia which have come to an end on account of the payments issue. But I think it would be bordering on hubris to say that India can really hope to make the rupee international at this point of time. And I seriously don't think this was the objective of the RBI when it came up with it, because it will work with countries like Russia, it will work with Iran, probably in countries like Lanka. But we should remember that all such arrangements which are made where India typically has a deficit means that the exporter to India will be having a lot of rupees. Now, let's ask this fair question. Will other countries, I mean, non-financial entities be willing to invest in government bonds? The answer is simply no. So we have seen the FPIs withdrawing from India. And these are financial investors. Now, today, if you're saying Russian oil companies, which probably have a surplus with us and have this money in the Nostro or the Vostro accounts, will have to start investing in government paper, I think it becomes very much restrictive. So to my mind, I think it's going to help to a certain extent in terms of our exports. They're not very, very significant, but it will help our exporters having problems trading with Russia. But we should not stretch the argument any further. And as you rightly said, China has been trying to do the same thing, and with its size and clout in the market, it has not really succeeded. But I don't think this was the intention, though it could be interpreted as being one, the way it's been presented today.
Right. Mr. Sabnavis, wanted your opinion on one more issue with regard to the outflows. I mean, rupee is falling despite inflation in US higher than in India, and foreign outflows to the extent that we've seen here is possibly one of the main reasons for that added pressure. So do you believe that this is a trend that could continue? Because like we were talking about, Fed will keep hiking rates until their inflation is controlled.
See, I think there are two factors here. One is, of course, that interest rates are going up overseas, especially the Federal Reserve increasing rates in an aggressive manner. The second is the surplus liquidity, which to my mind was caused by the quantitative easing programs, did not quite help America revive. I mean, to a certain extent it did. But one of the unintended consequences of when we had this surplus liquidity, it actually gushed into the emerging markets, and all of us really benefited from it. So today we have a situation where the quantitative easing has stopped. In fact, there's a pullback which is on the way, as well as interest rates going up in the US. I think a combination of these two factors have led to this relentless pullout of FPIs, not just in India, but in other emerging markets too. And this is something which will remain, because just remember that the ECB has spoken of stopping the QE, and there could be a withdrawal in course of time. So I think all this free money which came in, surplus funds which came in, there will be some kind of a full stop to that, and we will have to be on our own. When I say India, it's not just India, it's all the emerging markets when it comes to foreign investment flows.
Absolutely. And Professor Khan, your perspective on that move by the RBI for global settlements in Indian rupees, how do you see that really panning out for India?
As Madan explained very well, I mean, that might not really be something that we look forward to or work towards. Some of it might happen. Some countries might agree to deal in rupees, but for the rupee to become a currency of transaction is something that is far too far-fetched. And therefore, what we need, and what is important for all of us to understand now, that the way out in such a situation is really going to be leveraged on our exports. The falling exports, and we've seen exports falling for nearly 20 quarters now, is really widening the trade deficit. And such a large amount of current account deficit is something that cannot be helped by mere tinkering by simple open market operations. I think it is important for us to ensure that we do everything possible to ensure that exports go up. Exports started getting hurt soon after demonetization and that disaster with GST and then COVID. So it is something that is a 5-year-old problem, and it is coming to roost now. And unless there is clear policy direction in ensuring that exports pick up, and the trade deficit is going to rise, because imports are going up again like never before. So I think that more than the rupee as a mode of transaction, it is important for us to focus on exports.
Absolutely. Fair enough. Thank you very much, Madan Sabnavis and Professor Khan, for joining us and putting all of that into perspective on the issue of the rupee.